Mike, let's start in general, because we know that we've had, in general, subdued markets across sectors, lots of jitters about what's going on with Greece, what measures would Europe and the IMF take, and what bearing that's going to have basically on the international markets and also on banks that are exposed. Apparently a lot of commercial banks in Europe are exposed to Greece debt.
Absolutely. Well, I think, yeah, if you step back and look at it globally, for sure, I think everyone's got exposure. Not everyone, but a lot of people, So it's quite a scary situation because there's so much uncertainty. We talk about that affecting international markets, but obviously the reason we're here is to talk about how that influences African markets. And it really, the trend is showing no signs of abating currently. There's still so much uncertainty. Volumes are still very, very depressed. And I think until we get another catalyst, it's very difficult to see how it's going to improve, but we just keep at it and we just hope that things will improve overall.
All right, those markets that have been active, albeit those thin volumes you're speaking about, Egypt, how do we read Egypt? Because as you termed it, it's a yo-yo effect.
Absolutely. No, very much so. And again, it's when the volumes are thinner, you tend to get more pronounced moves, which is very difficult to read trends into. And we've had Egypt best performing one week, worst performing the next week. At the moment, though, particularly last week, it was more local retail buying, and those local retail guys tend to be smaller, obviously, and they tend to react on technical analysis more than anything fundamental.
Tanzania, volumes also very thin, but this time we're seeing foreigners very active in the market. What interests them?
Yeah, typically that market gets driven more by foreigners, actually. When foreigners come in, they obviously come in with bigger size than the locals would. As we know, there's the very restrictive measures on foreign investors. It's typically the banks that foreigners want to play. So we just saw some foreign demand returning to a couple of those counters, and that drove that market.
Mauritius, as we saw today, most counters flat, and that's very much been the trend over the last few days. But there's been a bounce in sugar stocks. I'm curious to find out why.
Correct. Well, it's very interesting. I know the name's down today. A lot of the names are down today. If we step back away from sugar just for the time being, we saw Gamma Civic up. We also saw Air Mauritius up, and that's based on the fact that they had very good numbers, as well as increased passenger numbers, which was actually pre-crisis levels. So it's quite interesting to see how the passenger number is flowing back to Mauritius, because we know the country is very obviously linked to Europe.
Yes.
So, but then if we get back to the sugar, it's interesting. It's been a poor year in terms of the drought and bad weather, but we're definitely seeing, the sugar harvest is starting now. And then we saw Omnicane, because they're going through a whole lot of regulatory issues, trying to obviously open a distillery in Mauritius. So that's proving a bit of a bounce to the sugar industry in Mauritius.
I think even, although there are peculiarities to what's going on in the sugar sector, the European link is fundamental here, because even for that sector to thrive, it's needed quite a lot of preferential access into Europe through various EU protocols. With what we're seeing in Europe right now, and austerity measures being taken quite seriously, and the euro taking a bit of a battering, what broader impacts are they going to have on Mauritius?
Well, without a doubt, it's negative, which is why when it was strong last week, it was a bit of a surprise. But then again, for the last month or two, it has been kind of trending downwards, so it was a bit of a bounce, possibly. I think definitely, you're right, it's very closely linked to the euro, and that's a historical link, obviously. And the sugar, the tourism, everything is related to the euro. So I don't think it's going to be doing any favours to the country. And then that, coupled with the fact that Mauritius is typically quite illiquid, even though it's a country that people like because it's very compliant and got very good rules and regulations, I think that the proximity to Europe is going to be a problem.
All right, let's talk about Zim Industrial. Normal market strength?
Yes, I don't think anything specific there. Again, it was on quite sort of low volumes. We saw some demand again from foreigners, back into the typical blue chip names, your Econet, your Inscores, your Deltas, etc. But nothing much to report there, I don't think.
On the other side, the Zim Mining Index lost some ground, and it's largely because of a sell-off in Hwange.
That's correct, yeah. Hwange this year has been amazing. It's up about 20% for the year. So I think there's a bit of a sell-off there. It's again, as we know, there's only 4 stocks on the mining index. But if you look at the other 3 names, Rio, Zim, Falgold, and Bandura, they're all down massively this year. And you're talking in excess of 20 or 30%. So I think Hwange, it was just a bit of a sell-off. It has rallied hard in recent weeks, so a bit of a sell-off.
Okay, so probably a bit of profit-taking going on there. Now, Kenya. Ooh, so many things going on in Kenya. It's a shilling that's taken a huge battering. It's exposure to events in Europe because it's also a major trading partner. Foreign demand weaker. I'm battling to just understand what's going on in Kenya.
Yeah, it's a concern because obviously it's one of the biggest sub-Saharan markets. You know, it's very, very important because a lot of the money that flows into Africa and particularly sub-Saharan Africa goes to Kenya. But international investors are definitely finding it very hard to find the demand in Kenya. You know, there's not much good news. As you say, the shilling is getting an absolute hammering at the moment. You know, EABL traded up massively in recent weeks and it's just selling off. There's a new tax, as you know, the cigarette and alcohol tax, and that's really hurting EABL. So it's difficult to find value across across that index.
Morocco, RMA Insurance?
Yeah, it was. RMA Insurance, as you know, is an insurance company, and they got an asset management division called RMA Asset Management, funnily enough. And they had some redemptions across some large mutual funds. So there was a sell-off pretty much across the board, and that dragged the whole index down.
All right. And Nigeria, are they following a global trend? Are foreigners absent? Because apparently Nigeria, interestingly, almost falls within that continuum of the sell in May, go away. It's got a lot of foreigners from Europe and the United States active in that market with that mindset.
Yeah, for sure. Well, it's the most active of sub-Saharan African markets, so typically people are more active trading in those markets. But it's been very quiet for a while now, you know, and again, it's a concern because the first port of call for all sub-Saharan Africa investors is to go into Nigeria. But we're seeing very subdued volumes there. You know, the orders are coming back and people are happy to pick up at low levels because there has been a sell-off. But I think it's more indicative of the global trend as opposed to a specific trend to the country.